All right, what's going on, everybody? Merry Christmas. It is Monday, December 25th, 2023. Glad to be with you. My name is Carlos Garcia, founder and CEO of GAR Capital, and welcome aboard to our weekly recap. Regardless if it's a holiday, it's time to get back to work. Futures are open. Rock and roll, guys. Glad you're taking a couple of minutes out of your holiday to join me and talk about the markets. Appreciate you guys as always. And I hope everyone had a happy and healthy Christmas season this year. We're getting ready for 2024. We only got a week left, so let's make the most of it. Let's see if we can make some money this week to make up for the the presents that we bought for our families, and the more we earn, the more we can give. Right? That's kind of the key. So let's go ahead and get started at work here. Dow futures are open, up 42 points. I feel like I'm doing a morning note this morning. NASDAQ futures up 21. So again, futures are open this morning, 0.09% on the S&P. Russell's up about a quarter point. So RTY starting to move, starting to get in that Christmas spirit here. Gold futures are down about 0.12%. Gasoline futures are down. Crude oil slightly up, and silver is down. So more than likely, I assume the dollar is up this evening. But again, futures are open. Glad to be with you. Let's go ahead and get started. First things first, let's go over the week. Unfortunately, even though I am wearing the Santa hat, the Grinch visited us on Wednesday. So we're going to talk about that really closely here. So I'm going to go ahead and bring up the last 5 days in the stock market. Before we actually start that, I want to go ahead and bring up the performance for the week in terms of the indexes. So let's go and bring that up, guys. Here's the past 5 days that we just had. Russell 2000, we talked about the Russell being the outperformer, up about 2.22%. That rotation, we want the broadening of this rally. S&P, another winning week, 0.30%. NASDAQ up 0.28%, and the Dow is up 0.21%. The Santa rally, technically speaking, has started on Friday. But as you can see here, Wednesday, the Grinch visited. What exactly happened on Wednesday? Wednesday, we had 800,000, I believe, worth of S&P 500 put contracts hit the tape, which caused a cascade effect throughout the entire market. It was a complete flush job, tested some support here on the NASDAQ, and then ended up bouncing anyways. We have not retraced the full amount as of yet, at least on the NASDAQ, but more than halfway there. S&P is relatively close. You can see we're at 48.10, above the previous all-time highs, which we broke on Tuesday of the past week. So unfortunately, that did hit our trade, so let's go over them. I just wish I had better news. It was pretty ugly, guys. I mean, this is just me this week. Terrible, unfortunately. Tesla reversed, obviously, with that pullback. AMD, Apple. It's not all sunshines and rainbows, guys. I have been here before on a tough Christmas. It was in 2018, but have some solace. 2019, 2020, 2021, and 2022 Christmas were pretty good. So, sometimes if that's the case, every 5-year effect, I will be ready in 2028's Christmas to take that time off or something, because that sucks. Again, I have a high standard for us, guys. You know me, 50% is nowhere where we want to be in terms of win-loss. Citibank and Apple were holds from last week. So if we're just taking a look at this week, we're really 4 out of 6, with Tesla and Amazon just absolutely getting obliterated. Amazon was up 20%. I should have closed it, obviously. Would have helped the numbers, but that pullback absolutely hurt everything we were trying to do this week, as we were just really playing the melt up. Let's go and bring up Apple. Apple was one that, in terms of just the headlines, that one just absolutely got hit due to the Apple Watch patent regulations. They had to pull some Apple Watches out. Again, then we had that drop on Thursday. We were holding that support. We bounced, but the beginning of the Santa rally didn't really help us out, unfortunately. So that was an L, and it's tough to see because Apple, it's been pretty good to us in terms of the stock. In terms of options, not the best before it has been, but not the best price action this year, obviously. And we filled it this last week. So let's go and take a look a little bit, kind of look back at where the mistake was. Friday, we got above 198.23. All we were looking for, guys, was 200, and then we just fell on Monday. Got that bounce, and then here was Wednesday. We absolutely crushed the premiums in terms of what happened with those S&P contracts. Remember, guys, everything is very integrated. Everything has been commoditized in terms of stocks. It doesn't matter about the company Apple, Microsoft, Tesla. They're all commoditized in the S&P. Apple is really, and these names are really too big to fail in a sense, because now they're part of so much derivatives. So it really doesn't matter Apple does good news or not. It's just that that flush just hurt everything. Citibank was another L that we had, and again, we got so close. 51.55, we were looking for those 52 calls, got that push, and then just sideways melt up, and that did not help. And we had a lot of volume too. That was the killer there. Let me go ahead and get out of this. My apologies. Amazon, we did well. We hit the 155 calls. Meta, we got AMD and Mara. So AMD has been, of course, the GOAT. Tesla pulls back for us, and that didn't work out. And I traded it for this past week as well. Right here. We were getting that push higher, and then just Wednesday absolutely collapsed it. It did bounce. So again, I still like all these names. It's not like I don't. The problem is that it was for the same week. The time decay absolutely was brutal. One of the tougher weeks that we've had this year, and that's one of those things that I just have to eat. Especially in the holidays, it doesn't feel great, but at least have the positive mentality to think that next week could be better, or the week after. So in my mind, hey man, we got 2 weeks until the end of the year, or technically speaking, this 1 week. Let's make the most of it. Let's do the best we can with what we got. Let's kind of temper our expectations in terms of volume. We know that things can change rather quickly. But again, a 4-day week, pretty tough. Tough sledding there. We don't have any risk open. I'll take a look at futures with you guys, absolutely, and we'll probably trade those. But you could see Amazon. This was Tesla that lost, unfortunately. You could see Amazon. At least we took it, which was good. Got that pop, and then it pulled back. I also sent Boeing to Masterclass, and we caught that right here at the top for 70%. That was a name on this week's watch list as well. Metaverse, we got as high as 315%. That actually outperformed everything. So that was a really great trade on Metaverse. I mean, just kind of keep it to the positive. It was in the money too. We had the 350 calls. Again, we knew what we were going for. Let's take a look at the daily. And again, breaking out. Metaverse is nearly, not all-time highs, pretty darn close. Yeah, pretty close to all-time highs, 384. So again, we're going to keep an eye on Meta moving forward. The problem is that the premiums are going to be expensive as the stock price goes higher. As we know. So Metaverse, I still expect more upside. AMD, I held that a little too long personally. AMD gets above 142.06. Again, I'm willing to go a little higher to 145, but again, that Wednesday pullback did not make any friends for everybody, but at least the team got it, which is important. Mara, again, Mara was absolutely on fire. We were calling this about this gap fill. Mara now has around 31.62 as resistance. Let's keep an eye and see if we can get above this recent highs of 27.76. If not, guys, we could just run it as high as we can, following until the April 2022 highs of around 32. So Mara, obviously, is probably way overbought at this point. We can always take a look. Let's go and add the study. Where is it? Edit momentum. Here we go. RSI. Yeah, way overbought on the weekly, as you can see here on Mara. So I would not want to be long here, especially with calls or anything like that. But again, this thing has been absolutely parabolic, regardless of what Bitcoin is doing. So this is a name that we've been trading all year. If you've been trading Mara with us, congrats. It's been a great one. But again, I kind of expect a little bit of a pullback here from overbought conditions, especially from where we are on the weekly, guys. Something's got to give. And then Amazon, we went for it again, and unfortunately with that Wednesday move, it just absolutely nuked us. That's when I held too long as well. I did close that first one, but again, it was just killer, that Wednesday move on the S&P. The only solace I can see is that it reset a lot of premiums, so we're not overbought across the board. So now we can start taking a look at some opportunities to make this back in this upcoming week, and that's the goal. That's what we're looking for. Let's go ahead and take a look. Let me take away this RSI study. Okay, great. Bring up NASDAQ. All right, so let's go and pivot to what we have this week in terms of economic data. Not much. We have Richmond Manufacturing Index on Wednesday, unemployment claims, pending home sales on Thursday, and Chicago PMI. So I don't expect any Fed speakers this week, and it kind of is a holiday week. We know what it is. So really all we're looking for here is all-time high alert on S&P 500. And the reason I said that is because back in June, I said that we would hit all-time highs by the end of the year. So yes, the S&P did hit all-time highs, but that's not the S&P 500 index is what I actually wrote. So we're pretty much about 60 points away. Can the market make me look good at least for today? I don't think anyone's going to be too upset at us that we didn't. But again, 48.18, we need to get there by Friday. Fingers crossed. Hopefully I'm right on the prediction. If you guys want to see it, I will be more than happy to. Let's go and bring up here Twitter or X for those who, call it that. That's actually the name of the company. Let's see. Where is it? Profile. Here we go. And you get all-time highs, S&P, SPX right here, end of the year. So there you go, January 30th. And again, the job's not finished, guys. So we're almost there, but we ain't there yet. So, let's see if Santa comes in. Remember, Santa rally begins until the end of the year. Average is about 1.1% in terms of gains. Let's take a look at it here. We'll go to some good news. Some good news that happened over the weekend. Putin quietly signals that he is open to a ceasefire in Ukraine. How long have we been talking about that? All it takes is one good piece of news to really get us over the top. Ceasefire sounds great if we can get it. So we'll see if we do, fingers crossed. But some things to be jolly about today. It's not all bad news. I know the options trading this week sucked because the Grinch came in on Wednesday. But let's find some good things to actually be grateful for. Stocks are up near all-time highs. Let's see if we get there. Gas prices coming down. We've been talking about that for a little bit. Mortgage rates easing. TNX. Santa Carlos have been telling you rates are going to fall, baby. Unemployment's still low. Labor market's still strong. Home values ticked up higher. And the savings account yields, that's important, up 5%, above 5% now. So here's the really good reason to be jolly. This stock market is not being boosted by cheap money. This is true price discovery. And we have a lot of reasons to be very grateful. I know this week being kind of put in perspective, it was a tough one, but a great year so far. A lot of great things that have happened. We're not there yet at all-time highs. Again, my fingers are crossed. Let's see if we get there. But at the end of the day, many things to be jolly for, at least for Christmas in terms of inflation. Now let's start to pivot into the macro, right, guys? We'll go to TNX and see exactly what are we looking for in terms of yields, right? And I've been looking back here right around 3.143%. We're right near, I want to say 6% on a 30-year, 6.8 or so. I think if we get to 31.43 on the 10-year Treasury yield, again, that'll just get us back to October of 2022. If we get there, we're talking about sub 6%, maybe 5.5% on a 30-year. Fingers crossed. That's going to give an opportunity for a lot of homeowners who bought last year to A, refinance, and that's going to help the banks, and B, for those homeowners who are actually looking for a home at a better rate, this is a time to save. So again, we're going to keep an eye on interest rates moving forward. What does that mean? 10-year yields. What else is important? The dollar. The dollar broke below 101.77. That was the week low. Very, very good sign. We need to get below 101 this week if we want stocks to go higher. But the big number I'm looking for is $100.82 or 100.82. Why? You have that low back from January 30th and the low from April. We broke below that in July. Market was moving higher, as we know. And again, if we just get that leg lower, we will be sub 100 on the dollar by next year, latest. And again, we know the easing policy of the Fed. We know that inflation is falling. Did you know on a 6-month rolling basis, inflation is at 1.82%? So we pretty much got target in terms of the Fed's eyes. They just said they actually pivoted. Finally, thank you. And now we're going to have rates go lower. What is that going to mean? That's going to mean that the dollar's going to go lower. That means 10-year Treasury yields are going to go lower. That means yield curves are going to be uninverted, as we talked about. The short-term yields are going to be paying less than the long-term yields. That's normal. That's what we want. And of course, what are going to be the beneficiaries? Tech and small caps. Again, and the banks. So 3. Banks, small caps, tech. That's what we're looking for. Now, mega cap tech may be a little stretched. That's fair. And we're going to talk about that in terms of the annual video where we go over the trading strategies together. That's going to be a fun video. I got you guys. But in terms of right now, in terms of the macro, again, the Russell 2000, if rates and the dollar can continue to go down, keep an eye on it. 2147 is definitely a possibility by the end of Q1. So do we put IWM in the top 10 stocks of 2024? I think it needs to go back in there again because I do expect more upside, especially with this breakout and the macro environment. It's a lot of tailwinds really supporting this market. Guys, think about it. It took a freaking unicorn comet real disaster in terms of a big fall in the market for all the buys to come back in and build that back up. Okay, so let's take a look at it. You can see on the hourly, that big drop was bid right back up on RTY, Russell. Wednesday we fell, not only retraced, it's above it. And again, we need small caps. We need them to move higher. It cannot always be Apple, Nvidia, Tesla, Netflix. It can't be those names. We need to broaden out this rally. That's important. So far, what I see, we're heading in the right direction. So let's go over the watch list for the week. These are the names that I'm watching. Nick will be posting his watch list on the Discord as well. So again, back to work. Let's go ahead and talk about Amazon. This is my first one. Didn't do well for it last week, obviously 1 for 1. But I still like Amazon moving forward, especially if it starts catching bids this week. 155.70, that's my alert for a breakout. Keep an eye on the 160s. Why are we looking at the 160s? Because the gap fill is at 163.06. So again, we may need to buy some time here. We don't know yet. But again, break above 155.70. I'm looking for the gap fill 163.06 in the shorter time frame, let's say in a couple weeks. Maybe after the New Year's of 2024, we should get that gap fill. It's the same gap fill we talked about with Mara, and that actually filled. So Amazon, keep it on your watch list this week. AMD, get me above 142.06. That's what I'm looking for. If we break above that, 145s will be fine. Again, we could buy some time there. We do have a wick here at 143.41, so we could be a little safe and just wait for that level to break first. We'll just do that, 143.11 or so. We break above that, then we can start doing the 145s. Price might be a little more expensive since we're waiting for that confirmation, but really 156 being the target is what we're looking for. That is the, I want to say all-time highs from 2022. Nope, not even. We got as high as 164.46, and so far so good on AMD. AMD, again, might be part of the top 10 of 2023. We had SMH last year, or 2024, we might have in the new list. We had SMH, which is the whole semiconductor ETF, which has been on fire. We'll go over that together, but AMD price action here is looking very, very nice. I believe 164.46 should hit by at least the end of the first half of 2024. So again, we could trade that all the way up to there, playing any pullbacks and buying the dips, because in my opinion, until really the beginning of the new year, this is a buy the dip market. And if you bought the dip on Wednesday, you did pretty good for the most part, because we bounced rather immediately. Let's go and take a look at Google. That's going to be my third one. I know, pretty tech heavy here. Again, IWM, I get really nervous trading that in options. The decay sucks. So again, if anything, I'll probably trade it with futures guys on RTY. We're going to get above 144.27. That's your April 2022 high. I would target 148.72. Really have a wick here to get to of 152.10. So that's kind of the target that we're looking for in the intermediate. But again, get me above 144.27, above major moving averages. There's really not much to this, guys. Again, we're playing the melt up on the names that are working. That's it. Not the names that are not. Apple, for example, is one that is not working. So if we get any kind of flush, Apple is probably going to be the prime candidate to actually short. And why do I say that? 192.78. We could start maybe targeting 190 for puts. Again, if we get a pullback, this is the weaker link in terms of the mega cap names. Why? Their sales are flat, guys. Really, all of this is multiple expansion in terms of Apple. And I am a Mr. Apple head. I love Apple as a company, but their growth is not there, and this name is expensive. So understand that as rates go lower, the expectation of growth goes higher. Remember that, always. Again, Apple works in a tough environment. They're the king, they have the cash. But where's the growth gonna come from? We'll see if the headset in February makes a difference. So far, the phones have been okay. The watch issue and the patents, that's not a good sign. But again, we need to see, again, Apple's very beholden to the consumer. Any kind of cracks in the consumer, Apple's going to get hit. So this one is not a name that will be in the top 10 of 2024. That I can tell you, because we may get a little bit of a correction in this name. Since as rates go lower, expectations go higher for growth. You're going to want to pay me a little more for actually investing in you, because you know what? I can get a 5% yield on SoFi high yield savings. Again, Apple needs to fight for that. And there's a lot of other names right now, in my opinion, like an Amazon, for example, that looks a lot more attractive than Apple today, which is actually pretty expensive based on the growth. Now we're going to go ahead and wrap it up here in terms of futures. 48.30, that's your highs. That's what you're waiting for. Until then, you're pretty much just waiting. Let's take a look at NASDAQ futures, 1773. After that, it's really just as high as the imagination can think of, because now it is all-time highs. And RTY, now this is not all-time highs. We can actually do a little something here. Let's see if we can get above 2070. I think that's the recent high. If we can get above 2070, then we could start using that 2050 as our support. That's your 50% retrace. Again, we did retest that during Wednesday's flush and held. We are now above that, again, higher than the retrace. So 2070, we could start moving up to 2100, move our stops. Really what I'm looking for is right here at 2131. And that'll be a nice move on RTY. So let's kind of keep that in focus, futures traders, since really you're playing all-time highs with S&P and NASDAQ. This is the one that needs to be catching up, which is RTY. So that's going to be the real focus this week in terms of futures, and I think we'll have an opportunity to trade it. Let me see if there's anything else that we could take a look at. Let's take a look at gold. Gold needs to break 2089. If it does, then we could play the upside 2100 plus. Let's take a look at crude oil. Crude oil, we are now above the 20. Let me see if we can get above 75 or so. If we could get above 75, maybe we play that 20 as our bounce point to this cross here. Uh-oh, do you see what I see, team? This is a death cross. We are now officially at a death cross on crude oil. Not good. So, if anything, we need to be keeping 75.08 as our resistance. And then we can short there. That's probably what we're going to look for, as long as this stays below. So, if anyone has any crude oil stocks, you can see XOM starting to pull back a little bit. You can start seeing CVX pulling back a little bit, testing supports. Do not be surprised. Names like XLE and MRO and all these industrial names, you're starting to see XLEs getting pretty close to that death cross. Could we be getting a rotation out of oil companies? Maybe oil prices fall a little more? Good for consumers, but not great for investors. Let's be real. In terms of gasoline futures, we hit a death cross back in October. So more to go. The 50 below the 200. Oh man, let's see the weekly. Okay, not a death cross there, but below the 200 on the weekly. Looks like gasoline has more to go. So for anyone who has a portfolio of energy companies and you kind of want to rotate yourself out of them now, looks like oil's going to pull back. And those who are looking for a nice fat discount on oil stocks and refiners and everything like that, keep an eye on that moving forward. We'll probably see that in 2024, an opportunity to buy a dip on a low demand energy market. That's what we're looking at here. So death cross on gasoline, death cross on crude oil gives us an opportunity to trade it. All right, team, we'll leave it there. Have a Merry Christmas, of course. I will see you guys tomorrow for the morning note. Again, we're going to make this week better than we did last week. Obviously, all things being considered, let's make it the best holiday weekend that we can, or holiday week. We don't do great on holiday week, so again, temper those expectations. It's going to be a lot of focus this week on teaching things and talking about things. So I'm going to be on the radio, on the Discord, guys, for Premium Masterclass, guys. I would love to see you guys there. We're going to talk about the markets, talk about some macro. We can start talking about different things, answer some questions, kind of make it a little bit of a learning time. If anyone's home from work or what have you, I would love to chop it up with you guys and help you guys learn a little more. So have a great rest of your evening. I will see you guys tomorrow for the morning note. Cheers all.